Hey everybody, good morning. Thank you so much for joining me today. My name is Pete Renzulli. Thank you for joining today's episode of Today's Best Stock Picks. What we're going to talk about today is hopefully you were disciplined yesterday. Hopefully you respected and honored your stop losses. The chaos that was going on in Washington, D.C. yesterday shook a lot of people. It was a wake-up call for active traders to really dig into their trading strategy and understand that you can't just set it or forget it. There's sometimes we had a lot of really good ideas yesterday. Our game plan yesterday, and I'll applaud our community, our members of our boot camp, because we had so many ideas that followed through yesterday. Some members were saying that it was the most that they made in any single day as a day trader. But then the chaos happened in the afternoon, and a lot of the bigger profits started to evaporate because of the speed with which the market turned around. So that means I want to get across, and it's kind of a little bit of a trading lesson before we get into the stocks, is you need to manage the trade as it's actively open. We get a lot of questions about, should you have a good to cancel order on your overnight stop losses? Should it only be an order for the day? Do you move your trailing stop losses and your stop losses at a certain point? And the answer to all of that is yes. You have to actively, it's called active trading for a reason. That means that you need to be an active participant in making money, preserving capital. And yesterday was one of those days where there was a lot on the table to go and get. A lot of stocks followed through early. A lot of stocks kept following through. But then the afternoon came, and which, by the way, I hope everybody's safe. Trailing stop losses were hit. That was the biggest question that we had in the real-time community yesterday was, if this continues, and I was very clear, this is not just a sell-off. This is chaos that's going on in Washington. So you need at this moment, I know you have big profits. I know you're up on a lot of the trades that we planned for this morning, but this is something serious. You need to respect the fact that this is something more than just profit taking. And my point was, a lot of people got stopped out. Then we had some discussions about trailing stops, so booking profits, but less than they actually had earlier in the day. That's long-term thinking. It's amateur thinking to be angry that your stop loss got hit when the circumstances changed. Professionals accept the circumstances, set an alert to get back in the trade, and if the alert triggers and the trade's still valid, put the trade back on. So what we're going to talk about today is some opportunities that did follow through, did hold the bid, which is what we call push and a pause, and actually stayed there, right? And we're also going to take a look at Apple. Apple, we're about to test a really significant reference point today. We had the 138 target. We had a 120 breakout. We had the 138 target. We hit the target, and now it's pulling back. What's interesting here is now Apple, for 5 days in a row, has made lower highs. So that means smart money is not stepping up and getting involved in the stock anymore. And again, very short-term window. Obviously, that's what we do, right? Short-term traders. It's interesting because even yesterday we broke down out of a consolidation and closed on the lows. Today we're slightly ready to open higher, but I want to call this out so that we as a community could manage this together, could watch it together, can learn by reading the tape in an incredibly, incredibly popular stock, one that a lot of people love to trade, and see how it follows through, see what it actually does, and see if the conditions that we're recognizing right now actually call the stock turning just based on the price action. I'm not calling it reversal. I'm saying the tape has changed. And when the tape changes, you should learn to trade differently. Again, we talk about it all the time. Every day is, let me get in there and trade maximum share size because I'm a day trader. I have a lot of money in my account. You need to learn to recognize the conditions. There's certain conditions that you should size up and certain conditions where you're like, you know what? That's all that's available today. I'm okay with making $1,000 today because the reward potential was there, but it wasn't awesome. The market wasn't on my side. The market internals weren't really super clear, but that particular stock was trading good. I stuck with that stock, but I didn't size up for all of these reasons. And that's what trading is about. That's what trading at higher levels is all about. You learn to build that argument. So the futures are bouncing a little bit today. We made new all-time highs in the Dow. Exciting day up until that moment, right? We had that lower opening, the market sparked a rally and off to the races later in the afternoon until what happened. So today is going to be interesting. We're set to open higher from yesterday's close. What we really want to see is if we recapture those levels from yesterday afternoon. That's what you should be watching today. Do we recapture those levels which it looks like we will. But again, reading the tape, that's the part, that's the beauty of trading. That's the fun part of trading, is putting the pieces together to say that means that, which means I'm going to do that. So first, we're going to start out talking about plug today. Big investment. We'll take a look at that. We'll see how it's higher, what levels we're going to be keeping an eye on. And then we'll dive into probably a list of about 12 stocks we're going to take a look at today. So let's head on over to the screen. Again, just very briefly about Apple. I don't want to say anything other than the tape appears to be changing. It's showing us certain type of price action that we look for in the boot camp, where we call reading between the lines, reading the notes, as opposed to just the big picture in the whole song. And the notes right now are telling us that the tape has changed. If we open lower in Apple, even though it's set, it's a little bit higher right now, pre-market, very early, 3 hours before the market opens. If we open lower and continue lower, this is going to be one that I'm going to stay away from. If we open lower and buyers come back in, test yesterday's low, then maybe we'll look to make another run at 138. But I'm staying away from it until I get proof from the market that gives me a little bit more reasons to look to get into the trade. Plug is actually interesting. We actually had a member over here, I believe it was, on Monday when Plug was going down, asking if it was a short sale. I want to make it clear. Professional traders look for obvious order flow, look for obvious situations where the smart money is involved in a stock, where they have attention, where they've made a commitment, and then just piggyback. That's the whole point of what I teach in the boot camp. That's the whole point of what our community does. We're not looking for a top. We're not looking for a bottom. We're looking for a spot where, oh gosh, there they are. Let's get on the train. This is not a short sale. It wasn't a short sale. It was a trade that you would look to start building a position long. And now they have pretty significant news out this morning. South Korea invests $1.5 billion in the stock. And you can see right now it's trading up 21%. So what's the trade? I mean, 42.50, that's a big jump. It's up $7 from where it is, $7.50. This is where you need to understand how to manage trades properly, because this is a constant question that we get. I did a good job of finding the stock, but it gapped way past my reference point, which now means that you've either missed the perfect entry, or it's hard to manage risk this late, or you need to adapt how you're entering into a stock that's gapping this high. Now, what that means is you could use what we call an opening range breakout, which would be a shorter intraday entry price, and then use today's low as the stop loss. You could drop down to what a lot of people do and use the hourly time frame to time a trade into this direction. But you need to manage the downside risk, which means that you need a line in the sand intraday to determine when you want to get involved in the stocks. We get questions all the time. I have a full-time job. I can't trade real time. How do I get involved in these trades? And the bottom line is, you need to only place orders within the time frame that you could actively manage those positions. So if you can't be in front of your screen on a big gap up like this at 21%, you have to accept that and you can't run your business in a way that you're not available to be there. So you need to let it settle in. You need to allow the day to play itself out, and then look to enter tomorrow if and when you can manage risk. Now, if you're okay with and you think this story has legs, then you could enter intraday using one of the two methods that I just discussed. But you have to remember, and this is, again, another common feedback that we get from members of the community, which is the stock, I got stopped out intraday while I was at work. How do I change that? And you really can't, because you're really asking the question of how do I prevent something that I can't do anything about? So what I'm basically saying is you need to manage positions according to what's realistic for you to be at your screen. This looks amazing. We will be getting involved today in the community. We will be calling out entries and exits. So we love this volatility. Now it's just a question of looking to the left and saying to ourselves, is there any other price that's significant? And going all the way back to 2008, this was the resistance we've been talking about. Now 60 is going to be the next level. So this is an interesting play in this stock. Very interesting. And we'll be all over it today. There's a couple of other stocks that we have that are setting up really well. CLSK, I'll give full credit to our community. They started calling it out down to this area here. And it just started to get clean. Clean meaning easy to recognize energy candlesticks, smart money attention from the open to the close. And yesterday, again, gave us some good follow through and actually opening higher again today. Mara, yesterday we talked quite a bit about these stocks, and we got some nice follow through again yesterday. So now what do? We actually just for the first time broke out of the $11 to $14 trading range. This is as close to the optimal entry as you'd get unless you were able to buy at or near yesterday's opening price yesterday. So now the trade is, as long as it stays within, above 14, the next trade is the profit target off of 14. So what's challenging here now is because the stock was basically a penny stock recently, and again, $4, this is not the real move. Like moving $10 is not a common move for this stock. We don't have enough price history. So this is one of those situations where if you get into the trade, you need to manage it with the trailing stop. Also, because you missed the optimal entry, which was 14, and now it's trading at 19, that means that you need to work the order as opposed to going in with full share size because it's already gone what it normally does. So because it shrank 50% of the profit potential already, that means that you need to manage the trade differently. Next, we have run. Again, we called it in our game plan yesterday, solar stocks, strong. Keep an eye, solar stocks and Bitcoin stocks yesterday and marijuana stocks were three sectors that we were all over yesterday. And all of them produced some really good, clean day trades yesterday. Now we're looking to extend into some longer term swing trades. So run and ENPH in that category, some really good follow through and getting more follow through today. And again, though, here's the thing. You need to be able to look at the charts, make the decision for yourself, read the tape, and determine how close are you getting to the optimal entry. And if it's further away from the optimal entry, that means that you need to work the order. When I say work the order, that means that you need to be smart and go out there with a lower initial share size, because if you're late to the party, the odds of it wiggling and jiggling to shake you out of a good position are pretty good. But if you have the right share size, you can withstand the movement. And then when it takes off again, you can add more to that position as it moves in your favor. Caterpillar is another one, finally punched through. This is a big one because it finally got through this level. That's basically a trading range for the entire month of December. So again, surprisingly this year, the stock has been a really good stock to day trade. And on a swing trading basis, this is what's been challenging about the stock. It basically goes into these pauses, for lack of a better way of putting it, for a couple of weeks. So you can see we had a large green candlestick here and a pause. We had a large green candlestick and then a pause. So it's been easier to, ironically, it's been easier to day trade than it is to swing trade it. However, you can clearly see the big blue line is up, right? So that would mean, again, if you don't want to get shaken out of this trade, if you don't want to tie up too much capital in a position that's not moving that much, this is another one where you need to learn to work the order. Next, we have RMG, which is one of the stocks that is pulling back after making new highs. Again, let's take a look at the longer term picture here. So this was resistance. We pulled back and hit that resistance level. So now what? We have a nice push, a pause, a push. We're probably going to pause here right around this resistance level, and then we're going to look for another run higher from there. But we also want to get into probably one of the sectors that's waking up the most right now. It's incredible how many of them are making new highs, which is the financial sector. So we're going to take a look at this, and then you could judge which ones are comfortable for your portfolio. So we have Zion, we have Morgan Stanley, we have Goldman Sachs, State Street, Capital One, and PNC. So the reason I'm bringing this up is very clear. You obviously need to make a decision for yourself. How far are you away from the optimal entry? What do you believe is the profit potential on the trade? But the real point that I'm making here is money's flowing in to solars yesterday. Money's flowing into Bitcoin stocks yesterday. Money's flowing into marijuana stocks. Money is flowing into financial services. It's not hard to be in the right stocks when you just dig a little bit deeper and say, wow, a lot of smart money is doing the same thing. Again, I should be piggybacking on those trades. Following up here with HES, HES, very, very clean breakout, and FANG, which finally got through this resistance level here. It's got some short-term resistance here, but the next level we're looking at is around the 64, 65 area. I just want to go back to that RMG. I'm not sure why that was in my list. That was actually not something I'd be looking to trade. So scratch that out of the game plan. So anyway, the bottom line is this. If you respected your stop loss yesterday, which I hope you did, you're going to be in good shape with today's higher market opening. Now, does that mean that we're going to stay higher? Well, we got a little bit of clarity last night into the morning. Again, keeping political affiliations out of this. The reality is it was certified last night. I'm not getting political, so let's just leave that out of there. But the market likes certainty. So now we need to know if that certainty was priced into the rally that we had into new all-time highs, with the Dow hit new all-time highs, the SPY this week hit new all-time highs. Is that rally priced in? Or is this just the start of something different? If the rally's priced in and the market pulls back a little bit, then we get a lot more stock specific, like I just mentioned, in those individual industry groups. So we got a lot to unpack, but gosh, this is fun, isn't it? There's so much to do. If you have any questions about any of these stocks, leave me a comment below the video and please subscribe. That would mean the world to me. Have a great day.